Oracles. Today we're going to discuss what to expect from the stock market this week. Again, this is not going to be a prediction as to which way the stock market is going to move, but it's more about giving you guys some information as to what is going on in the market so that you can do your own due diligence and research to decide what is right for your portfolio, whether you want to buy, sell, or just hold. So we'll get into that in just a minute. This is content that you guys like. Please hit that like button and subscribe down below. Let me know your thoughts in the comments as well. What do you think is going to be happening in the stock market this week? So, of course, really the biggest thing that we have going on, and pretty much all we're going to be discussing today, is going to be the FOMC meeting that we have going on Tuesday and Wednesday of this week. So, of course, this is going to come down to what is the Fed going to be doing for rate cuts? The market has been fluctuating quite volatilely between 25 and 50 basis points over the last couple of weeks as far as their expectations go for what the Fed is going to be doing. Nobody is actually going to know other than the Fed until we get to that day. So when we're looking at those numbers, we just have to decide, all right, well, what do we want to do for our own investing thesis? So on Wednesday afternoon, Jerome Powell is going to let us know what the Fed has decided to do for the rate cut. It's going to be coming out at 2 p.m. Eastern time. And now back when we saw the hikes going on, a lot of times we saw the market move one way during the hike. And then when Jerome Powell started speaking a half an hour later, it moved in the other direction. And sometimes we even saw that as sort of a fake out. And then the next day we saw a complete reversal in the market. So again, it's so very unpredictable as to what's going on. A lot of times we get the initial number that comes out, algorithms do their thing and do, buying and selling in one direction or the other. Jerome Powell comes out and says some certain things and it moves it in the other direction. And then a lot of institutions actually take some time to digest all of that information. And then they start to take a look at it and go, oh, maybe there are some things that are different. Like, hey, this last time we saw, for CPI, for instance, housing was a big outlier. Okay, so maybe the CPI number itself wasn't all that bad because we had that outlier. Sometimes that happens during the FOMC meeting. And then you have to take into account, what is Jerome Powell's stance? Is he dovish? Is he hawkish? What were some key words that he had changed in this time around from the last time? So a lot of that gets digested the next day, and then the market will react according to that because it had time to actually take all of that information in versus algorithms going out there and just immediately making moves based upon strict data that they got. So again, that's a reason why I don't take any time whatsoever and put any emotions evolved into what is going to happen. I'm not going to try and predict what's going to happen because we might get both. We might get a huge rally and then a massive sell-off, or we might get a massive sell-off on the rate cut announcement and then a massive rally the next day. Truly don't know. And don't forget, we still have the elections that are going on, and that volatility is just going to continue to ramp up over the next month and a half. Now, this is also the last week before the buyback blackout period. So no companies can do any buybacks after 9/21 between September 21st and October 31st. So this is the last week that any of them can do those buybacks. So the volume of buying is going to be dropping down significantly just strictly based upon buybacks. Then we also have the rebalancing that's going to be going on next week. We'll discuss that in next week's video. But when you look at the rebalancing going on, and of course, we saw some volatility at the beginning of this month, then you're going to have that rebalancing going on for the end of the quarter next week. Between that and no buybacks being able to happen, there's going to be a lot of volatility and a lot of movements in probably both directions going over the next few weeks. And I think the kickoff is going to be what happens with the FOMC meeting. Because this is what happens when you ever get CPI data, rate hikes, rate cuts, any information, even when you see it when it comes to earnings reports, there's just a strictly mathematical equation that comes out. And based upon a 25 basis point cut, the market's going to be at X price. At a 50 basis point cut, it's going to be at X price. How much of that is priced in for either one of those outcomes? And then what's going to happen is as soon as we get that outcome, the market is going to immediately adjust to that outcome based upon what all the algorithms are set to. That's all it is. And none of us are going to be faster than the algorithms. None of us can sit down and take in all of the data possible that's out there to figure out what those outcomes are going to be. There's a lot of institutions that pay people a lot of money to figure this out, and even they get it wrong. So if you guys end up getting it right, chances are it's because you got lucky, and that's about it. Maybe you did a lot of due diligence and research. I do the same thing, and I come up with my explanations as to why I think this is going to happen. But at the end of the day, what is my success rate on that? I don't even know. I don't even track that at all. I kind of do my predictions and figure that out. But that's why I've come down to a dollar cost averaging thesis and a strategy, because for me, dollar cost averaging is just so much easier to follow and to just go along with. And historically, you get a lot better results with that. I actually came up with an analogy about dollar cost averaging yesterday as I was driving, going down the highway, and here I am just doing my thing. I usually go 75 miles an hour. I've got it on cruise control and I just do my thing. And I see cars bobbing and weaving and zooming up ahead. And then here I am still passing them. And how many times have you guys been on the road and you're just driving along, and you see cars bobbing and weaving, and then they zoom past you or they're tailgating you. And then all of a sudden you get up to a stoplight and you're sitting right next to them. It's a lot like dollar cost averaging versus people who are trying to swing trade in the market. Some people can swing trade in the market and do very well. My dad is one of them. And sometimes those people who are bobbing and weaving in traffic get far ahead and you never see them again. But you know full well that more often than not, you end up seeing that person right next to you, or if they are ahead of you, it's maybe a car length. So, is all of that effort that they went through really worth that extra car length or sitting next to you and staying even? To me, it's not. Maybe it is to you. Maybe you enjoy that kind of swing trading and it doesn't matter to you because that you thrive on. Cool. Everybody has a different investing strategy and style and risk tolerance. That's not me. I just want to go steady Eddie, do my thing, stay in that lane doing 75 miles an hour, dollar cost average, and I'll get to the same place the other guy's going to get to. Chances are, in most cases, I'm going to be right next to him all along the way. I might end up even passing them. And yes, every once in a while, they're going to beat me out. Fine. That's fine. I don't care if one or two people beat me in the long term because they did swing trading, because odds are they're not going to beat me. So I just want to share that analogy with you guys because I thought about it when I was driving yesterday and it made total sense. You just see these people going out there, swing trading, they're options trading. They do so many things. They're emotionally involved and they're all agitated and trying to figure out why they can't succeed in the stock market. And I'm like, dude, just take a step back. I was that guy. I was that guy a few years ago, swing trading, getting emotional every time I see a stock price moving up and down, even on a daily basis, minute by minute. Do I buy? Do I sell? Man, that was stressful. Good thing I didn't have any hair at the time because I would have lost it. So now I don't have to worry about it. I don't have to have my emotions involved. I just take that step back and I'm like, hey, now I just watch my income grow. And this past week, I saw my income go up by $4 per month. And of course, people are like, $4 per month, that's not a lot. And again, I'll say it again. You look down, you say, hey, I found $4 on the ground. Would you be happy? I know I would. If you wouldn't be happy, cool. Maybe you have just so much money that $4 means nothing to you. That's awesome. But to me, $4 still means something. And if I found $4 every month that I can invest back into the market to then build that up even more, that's pretty darn exciting. I mean, looking at my all time return here, that's up to almost 38% as an all time return. And what I really like about the snapshot that I made for myself here is yes, my yield and yield on cost went down from last week, but my all time return went up. So that's why I built my portfolio the way I did, is because I'm going to be capturing growth and income. And looking at yield, and I don't always like to go by yield because yield's going to fluctuate based upon how the market is moving, but that's fine because if the yield is coming down because my all-time return and my actual returns are going up because my portfolio value has gone up, that's perfectly fine. Then I can take some assessments and say, do I want to sell something? Chances are no. Or I can take a look at other things and say, all right, well, what didn't move up? Maybe I buy, or maybe I just keep on stockpiling some more cash and waiting for that next pullback to add in there. Again, it's very, very simple the way I have broken this all down for myself. And I just follow it right along. And so it's going to hold true exactly the same as we go this week. And this week, when we get the FOMC meeting, if the market ends up selling off, I'll probably end up having some cash to use and I'll invest it in those places that it has sold off to. If the market ends up rallying afterwards, cool. I'll just take more money and put it into cash and I'll hold that cash until we do get that next pullback. The market always pulls back at some point. Now, yes, over a long term, you're always going to be trending upward, but we always get times of corrections. We always get times of recessions. We always get great buying opportunities. And I always want to make sure that I am ready for that. This week coming up with the FOMC cutting, historically, when we've seen the Fed cut, we tend to see the market pull back. And in the past, we have gone into recessions. Maybe they pull off a soft landing this time and we don't get a recession, but there's going to be a lot of uncertainty. And even if we don't, historically, we still get a correction every single year. So I just wait for that correction. When we get that, I'll have that cash to deploy, buy that in, reset, and start over again. It's just that simple. So that's the way I operate all of this. And again, watching the FOMC going on, watching what's going on with the election over the next 6 weeks, I'm not going to be emotionally attached to anything. I'm just going to follow what my spreadsheet says. When there's a buying opportunity, I'm going to buy. And again, I'm not really selling anything. So I do track all of my stocks and ETFs. And I will do that 3-part series for you guys coming up. based upon my top 5 ETFs, my top 5 BDCs and REITs, and my top 5 dividend growth stocks that I really like that I have invested in. And again, these are just things where I'm not going to go out there and break down each one specifically. There's a lot of people who do that. There's a lot of videos out there really diving into each one of these. But I really want to encourage you guys to do your own due diligence and research and get out there and do that and not just listen to what somebody on YouTube has to say. And all of them say very good information. I don't want to take anything away from them and discredit them. They're all great. They give a lot of great information, but I want you to be comfortable doing that on your own. I want you to be able to go out there and say, all right, let me find out, how do I find the earnings report for Microsoft? How do I find the prospectus for this ETF? How do I find how a BDC or a REIT work and operate? And I want you guys to figure all that out. And I'll share some of the resources that I use to really dive into that. Like Seeking Alpha is one of the ones that I use as well to go in there and just kind of like dive further into it. But I can still do my research through that. And then I find stuff through the company themselves. And I want you guys to be able to do that. I don't want to do it for you. I want you to learn how to do that yourself. So I'll show you the resources and then you have to go and do it. One of the things that I've always learned in my life is I'm never going to be a crutch for someone, but I will match someone else's effort. So if somebody's going to come out and say, hey, I am willing to do this for myself, heck yeah, man, I'm right there with you. I'll be right by your side, helping you get along every step of the way. The more you push yourself, the more I'll be there to push along with you. But if you're going to be there wanting somebody else to just do all the work for you and then kind of use the Cliff's Notes for everything in life, again, there's nothing wrong with that. I've done that before in the past. Sometimes you just want some quick information. It's fantastic. I'm not going to be that source all the time for that. I want you guys to be able to learn how to do that on your own. And once you learn how to do that on your own, which is what I did, then you can kind of go into those other sources and say, okay, you know what? They've got the information that I like. That's what I've seen. They're doing a good job of this. I can follow them and then just quickly go over to the other stuff that you use for your own resources to just kind of double check and make sure everything is good. That's what I've done. And I would just want to make sure you guys learn how to do that as well, instead of just utilizing me for all of your information, because I can be wrong. I'm not giving you guys financial advice. I can be absolutely wrong on whatever I have to say out here and could be screwed up entirely. I screwed up for the first 2 years of my investing. I basically screwed up because I didn't understand how the market worked. And any information I gave at that time was probably terrible information. And I want to make sure that you guys know that I have been known to give terrible information before. So don't always trust what I have to say. You have to do your own research and figure it out for yourself. So that's all I've got for you guys. Again, really the big thing going on this week is going to be that FOMC meeting. Really pay attention to what's going on to that. And again, if you're a long-term investor, it really doesn't matter. But if you're, a student of the market and somebody who is just understanding why the market moves the one way or the other, these are important things to go by. So again, it's going to be happening Wednesday afternoon at 2 p.m. Eastern time. That's when the number gets released. And of course, we'll probably see some fluctuations going into that with, the anticipation of what's going on. You never know when we get black swan events too that could possibly be coming out. We do get the jobs report later this week, that weekly jobs report that's going to show us how unemployment is moving as well. So that can help move the market one way or the other also. And one last thing is the merch store is up and running. I just checked into it again, being off of the channel for so long. That was one of the last pieces I wanted to get into. It's still up there. And I want to thank a couple of you back in June who bought a couple of shirts from me. That was a very nice surprise. So thank you guys so much. So you see that link under the video down below. Again, I've got some great merch in there. I'm going to go into, and I will take some time. If you guys want some different colors or different themes or things like that, let me know. I'll go in there and I'll update them. I really haven't had a chance to go in and update everything. It's just kind of set as is. I am working on getting some new merch in there, so I'm going to do some new designs for those as well. So again, if you guys have any ideas, I know Hanif has given me some great ideas in the past, so I'll take your ideas, I'll throw them in there also. And if you give me a great idea and it works out, I'll throw you guys a perk. Maybe I'll throw a free shirt out there for you for the idea if it does well. So I just want to make sure I thank and credit you guys for the hard work that you have put in. Otherwise, that's all I've got for you guys. Thank you so much for watching. I appreciate all of your support. Have a great one.